Well then, Chris, is this something of a Santa rally that we're seeing in the markets now?
Good morning. Yeah, I hesitate to sort of use it, but it does feel that way. You know, the markets always tend to go up into the end of the year. It is sort of a pre-Christmas tradition, given the light economic calendar today and for the rest of the week, and the fact you've got very thin volumes. It looks as if most people have decided to take the bull by the horns and push it up into the end of the year. The year-end performance window dressing also helps as well, if people are looking to buff up their returns just before the final bell of the year.
Okay, just want to take you back to that story we were talking about there on M&A. 2014, a bumper year. Is this as good as it gets?
I think it's likely to see more on the way, actually, really. 2014 was the year of the tax aversion M&A deal, and that avenue has been closed off to the US now. They've shut that one down. But I think it's just the beginning of something. There are further maybe possibilities in the US, Chinese companies looking to be on the move as well. And of course, investors don't like it when companies sit there and do nothing. And if there's a sense that actually other people are on the move, this requires a sort of momentum of its own. So I think you'll continue to see this beginning of an M&A wave actually from 2014. It's just the start of something, and that's going to continue to gather pace into the next year.
Okay, and we were talking there about oil as well. Do you think we've seen this trough in the price of oil? I mean, below 60, I mean, do you think this is as low as it goes?
It would be a brave thing to say, but it does look as if we've actually found a bottom for the time being. A lot of the bad news is now in the price. The supply stories there. We've had the weak demand story finally coming through as well. So investors are now aware of really what's going on. If you look historically at oil returns for the calendar year, the strong period is always the first half of the year. The second half is always very weak. It was particularly weak this year, but it looks as if the industry will pick up into the first half of 2015, and that will drive oil prices higher. So I hesitate to say we've seen the bottom in oil prices, but I think we've seen the end of the heavy sell-off for the time being.
Okay, very quickly then, just to finish up, 2015, if we do have rising oil prices, we've got the Fed tightening, China slowing, doesn't paint a very rosy picture for equity markets, no?
No, it doesn't, but then we've said that, I think, at the end of the last sort of 3 or 4 years, we've always been able to point to things and say, look, this could be a major issue. And of course there oil, Russia, Greece, even on the agenda again, once again, so it feels like we're sort of deja vu once more. But the point is that equity markets are still going up on the basis that you've got very little return elsewhere. And even with the Fed moving to tightening, and I think it's unlikely they might tighten, but even if they do, you've still got a strong US economy, and that's probably the best rationale you could possibly find for buying into equities right now.